Welcome to Mehrullah Jamali Capital Market Insight. In this video, we'll be diving into our weekly Forex market analysis. We'll cover fundamental data from Forex Factory and discuss the key economic indicators you need to watch this week. Then we'll move on to our technical analysis for gold and EUR USD. Let's get started. First, let's take a look at the fundamental analysis. This week, several high-impact economic events could significantly affect the Forex market. Starting on Monday, we have the state manufacturing data. This report provides crucial insight into the health of the manufacturing sector, which is a key component of the economy. Positive manufacturing data typically signals economic strength, which can support the dollar. Also on Monday, the Fed chairman will deliver a speech. This is a critical event to watch because any hints about future monetary policy can significantly impact the dollar. Traders should be prepared for high volatility during and after the speech. Moving to Tuesday, we have the retail sales data. Retail sales reflect consumer spending, which drives a large portion of the economy. Positive retail sales data usually bolsters the dollar, as it indicates strong consumer confidence and economic growth. Finally, on Thursday, we have the unemployment claims data. This report is a weekly measure of the number of individuals filing for unemployment benefits. Lower than expected claims suggest a healthier job market, which can further strengthen the dollar. Based on my analysis, the dollar is expected to remain strong this week due to anticipated positive economic data. However, be cautious of these high-impact events as they can lead to increased volatility in the market. Now let's move on to our technical analysis, starting with gold. Last week, we identified two key levels for gold, 2350 as support and 2450 as resistance. The market respected these levels, moving within the expected zones. For this week, our strategy is clear. If the market doesn't break the 2450 resistance zone, we'll look for short-term selling opportunities around 2420 and 2400. Our target profit for these sales should be around 2350 and 2300. This means if the price reaches these levels, we should consider closing our positions to secure profits. If the market touches the 2300 support zone, we'll look for buying opportunities back up to 2400. This means if the price falls to 2300, it could be a good entry point for buying, anticipating a move back up. As long as the market remains between the 2285 support and 2450 resistance zones, we'll use this strategy. However, if these zones are broken, we'll need to adjust our trading strategy accordingly. For instance, a break above 2450 could signal a new bullish trend, while a break below 2285 could indicate further downside potential. Next, let's look at EUR USD. EUR USD is currently in a bullish movement around the 1.09050 level. This level is crucial as it has acted as a significant resistance in recent sessions. As long as this level holds, we will remain in a buy position. I do not recommend selling EUR USD at this time because the overall trend is bullish. However, we should be prepared for potential retracements. If the market retraces, we will look to buy from the dip. Specifically, if the price pulls back to key support levels, it could present a good buying opportunity. For instance, if EUR USD dips to around 10880 or 10850, these levels could offer good entry points for long positions. Always ensure to place stop-loss orders to manage risk effectively. Our strategy here is to buy the dips, anticipating that the bullish trend will continue. In conclusion, the fundamental analysis suggests a strong dollar this week due to expected positive economic data. Key events like the state manufacturing data, Fed chairman's speech, retail sales data, and unemployment claims will play pivotal roles. For gold, the key levels to watch are 2350 and 2450. Our strategy is to sell near resistance and buy near support, adjusting as necessary if these levels are broken. For EUR USD, we maintain a bullish stance around 1.09050, looking to buy on dips rather than sell. Adjust your strategies accordingly if the market breaks these critical zones. Remember, managing risk is essential in trading. Always use stop-loss orders and be prepared for market volatility, especially around high-impact economic events. Thank you for watching. Don't forget to subscribe to stay updated with our latest analyses. Have a profitable week ahead.